What's going on, YouTube Nation? This is GB Merce. This is my lecture on how to invest in real estate. Everybody loves real estate. Everybody talks about real estate. Grant Cardone, you see it on Facebook. You see all these apps. You see people asking about how to actively invest in real estate. Well, many people don't know what a real estate investment trust is, and that's very important to expand your dividend portfolio, especially your dividend stock portfolio, as well as your stock portfolio. If you have an IRA or Roth IRA, you can actually invest in real estate and be rewarded and actually have tax discounts. So make sure you check out this channel and subscribe to this channel for future videos. I'm going to teach you how to make passive income. I don't believe in charging or anything. I believe that knowledge is power, and I would like to share my wisdom to you guys. And I can do this through YouTube and social media. So, how to invest in real estate? What is a REIT? Understanding a REIT when it comes to investing. So, what is a REIT? A REIT is called a real estate investment trust. This is a company that has ownership, which they operate the majority of the time with income producing real estate. REITs own many types of commercial real estate, ranging from offices and apartment building complexes or buildings to warehouses or industrial warehouses, hospitals and rehab centers, shopping centers and plazas, hotels, and even timberlands. Some REITs engage in financing real estate. So basically, there's companies out there, okay, that invest in real estate. I'll just give you an example. LTC, they mostly invest in, the symbol is LTC, it's long-term care. They invest in skilled rehab facilities for people who are retirement age or near retirement age or mentally or physically disabled. These are like nursing homes and facilities. That's a really good real estate investment trust out there. There is EPR Properties, which is a really nice stock out there, which has grown and making a killing in the stock market. They invest in like complexes and movies and theaters. There are some hotels that are under REITs. So it is really nice to have a diverse portfolio. They can be public or privately traded REITs. So I'm invested in Fundrise as well as Rich Uncles, and those are private REITs. There is called the Bricks rate in Rich Uncles, which I will discuss in the future. They are kind of invested, and their philosophy is to invest in commercial real estate locations or buildings, like a Starbucks building where they charge rent to Starbucks and make money. And they also invest in gyms because millennials like to work out, kids like to be active, so they invest in gyms and many things like that. So that's one thing that they invest in. So REITs were created by basically, Dwight Eisenhower signed a public law 86-779. It was nicknamed the Cigar Excise Tax Extension of 1960, which gave investors an opportunity to invest in diverse portfolios, which were income-producing real estate. So basically, this was signed into law. People capitalized. They started putting this in mutual funds and dividend mutual funds, and this has grown and adapted. And this is a very nice portfolio that you can have with your dividend stocks. So I highly encourage to have REITs in your dividend stocks, and I will go into detail about this. So as a REIT is a business, basically in the United States, a REIT is a company that owns and in most cases operates income-producing real estate. Some REITs finance real estate, and to be a REIT, a company must distribute at least 90% of its taxable income to shareholders annually in the form of dividends. So look at this. We invest in these companies, we invest in these stocks, and they give out their taxable income to shareholders so that they don't get penalized, and it's kind of like a loophole. So they're rewarding us for investing in them, and we're getting a dividend off of them. To qualify as a REIT under U.S. tax rules, a company must be structured as a corporation, trust, or association, be managed by a board of directors or trustees, have transferable shares or transferable certificates of interest. I'm just going to stop real quick. The board of directors or trustees are kind of like the group of people that dictate how much a price per share it will be handed out. Obviously, if the stock is growing, they kind of make the decision on that. Otherwise, it must be as taxable as a domestic corporation. Not to be a financial institution or insurance company. It needs to be jointly owned by 100 people or more. Have 90% of its income derived from dividends, interest, and property income. Again, it has to pay dividends at least 90% of the REIT's taxable income. So we're getting rewarded as investors. It should have no more than 50% of the shares held by 5 or fewer individuals during the last half of the taxable year. It's called the 550 rule. Have at least 75% of its total assets invested in real estate. It should derive at least 75% of its gross income from rents or mortgage interest. Have no more than 25% of its assets invested in taxable REIT subsidiaries. So this is a really good source in Wikipedia. I used some of their information that they had. It was really good. Wikipedia is now reputable, and a lot of people follow Wikipedia for definition and terms. I'd like to thank you for the description on a REIT as a business. Thank you again, Wikipedia. So why should you invest in REITs? Okay, why should you invest in real estate? So this is my part 1. So the new Tax Act provides substantial tax savings to REIT shareholders. Okay, so the Tax Cuts and Jobs Act provides substantial tax savings to real estate investment trust investors. The act allows individuals to deduct up to 20% of ordinary REIT dividends, which the remainder of the income tax at the filer's marginal rate. The effect on REIT investors who pay the top income tax rate of 39.6% on 2017 will drop to a taxable rate of 29.6%, producing an after-tax savings of 25.3%. So look at this. We are dividend, I'm a dividend lover. I'm sure you watching this video love dividends to expand your portfolio or use it as passive income. So there's tax savings now on REITs. So this is why you should expand this in your dividend portfolio and have this in there. Especially, I'm 34. I mean, I need to take advantage of this and let the snowball effect kick in and let compound interest kick in, because I'm invested in monthly and quarterly REITs that give off really good dividends. Some of them give off to 6%. Well, I'll go over on Rich Uncle's my 6% dividends that gives off a monthly dividend. Fundrise gives off quarterly dividends. I'm invested in Fundrise. I will have a video on that in the future. I'm also invested in O and STAG and many stocks. So here's just an example of the IRS, okay? How they do the math on this. The IRS typically breaks a REIT distributions into 3 categories. 1, ordinary income, 2, capital gains, and 3, return on capital. In 2017, an individual with the highest tax bracket paid 39.6 on ordinary REIT distributions. In 2018, there are 2 new factors. 1, a deduction up to 20% for ordinary income proportion of a REIT distribution, and 2, a lower tax rate. An individual in the highest tax bracket will pay 29.6% on ordinary REIT distributions. So you're getting a discount for investing in this company. Say like you make 6 figures or so, why not put some money in REITs that give off monthly or quarterly dividends? That can maybe pay off your mortgage if you put enough in, maybe some utilities or some bills, and that's just going to grow over time. So this is another reason why you should invest in real estate investment trust. A lot of you guys that are young, you can put this in your IRA or Roth IRA, let this grow, and then wait until your retirement age, and you can sell some of those shares and use that as a source of monthly income in the long run. Me personally, I am a dividend stock fan, so these because of this, I have to report this as income when when the snowball effect is taking in. So I could be penalized being in a higher tax bracket, but again, I'm getting a deduction on this for ordinary income based on what this says. So here's an example in the 2018 tax scenario. Multiply pre-tax ordinary distribution by the effective income tax rate. Let's just say 7,000 times 29.6 yields $2,072. Then subtract that from the pre-tax ordinary distribution to get after-tax income. So basically 7,000 minus 272 equals 4,928. Probably the most important thing is I would check with the individual tax advisor to determine how your individual tax profile is affected. So I'm not a licensed professional. I would rather have a CPA do my taxes. It's always important to have that done because you don't want the IRS coming right after you and knocking on your door if you don't respond to their things in the mail. So the funny thing is, you'll get people, telemarketers, or people calling you trying to scam you saying you owe money to the IRS. The IRS will send you something in the mail and then they'll knock on your door. So that's something that you need to be aware of. Make sure that you report this is taxable income. So right here is the source. This is an excellent source. Right here, they provided here's some of the information that they had. And here's just some examples of the tax rates. Okay, 39.6 was the old one. Here's the new one. Effective tax rate and ordinary dividends. So here's just some really good examples on that website if you want to check that out in detail. Just the reduction of everything, which is fantastic. So here's an example to illustrate a $100,000 rate investment under the new tax act would have an after-tax yield that is 70 basis points higher than the same investment in 2017. So here's a scenario right there, effective tax rate, and then here's how much you would be taxed. Let's just say if you got dividends, then after-tax income, and then after the tax yield. So this is something that you need to consider, and I highly encourage this to be part in your dividend stock portfolio. So here's the thing too, this is part 2, and I'm going to provide an example of a stock that I invested in. That's Real Estate Investment Trust. So some very successful REITs provide monthly and quarterly dividends. Successful REITs have beaten the S&P, and I have in parentheses my investments. I will provide, my channel will provide proof that they have beaten the S&P since they were publicly on the market. Real estate is always an excellent source of passive income. It doesn't matter if you are you have REITs or you just own a piece of land and real estate, you are going to make some excellent money in passive income. Right now I'm just discussing real estate investment source. So the next line is you can use REITs as a source of passive income. If you invest in the long term with REITs, you can treat your REITs that provide monthly and quarterly dividends as an alternative to a retirement pension. So if you look at my previous lectures, pensions are pretty much gone. So you have to rely on your 401k or 403k or a Roth IRA. I personally believe, and my philosophy is that you should invest in the stock market that give off dividends, monthly and quarterly dividends in the long run, so that you can have multiple sources of income, so you shouldn't be sweating bullets when you retire. I mean, how would that sound on the side of Social Security, which I don't think will be going anywhere soon, just because of the way it's managed and the way I just don't see them getting rid of Social Security with the U.S. government. Imagine an extra $1,000, $2,000 a month, maybe even $3,000 or $4,000 a month. I've met many people over the years that pulled everything out of their 401k and just threw it in a dividend stocks, and they're making up to $6,000 a year. I thought one guy was full of it, but he showed me his bank account and how he's doing with his dividends, and it was very not only inspiring but motivating for me to invest in real estate investment trust, as well as monthly and quarterly dividends that are growing. So I still keep in contact with him. I gave him my cell phone number at Myrtle Beach, but he is like, not just, even if he's making $6,000 right now, usually the REITs that are very successful, that give off monthly dividends, the price per share goes up. So like you're making 16 cents on a REIT, then it goes up to 17, then it goes up to 18. So he's making extra money. It's not just you're making $100, you'll make like $115 this month, or $120, or $3,030. It's just going to grow. So that's the nice thing about REITs. Private REITs are very powerful. My portfolio is full of public and private REITs. Fundrise really likes to compare themselves to the Vanguard real estate stock VNQ, and it is they claim that they've been beating that stock, which is in a lot of accounts like Acorns. A lot of people in M1 Finance love that stock as well. It is a really good stock, don't get me wrong, but Fundrise really likes to compare themselves, because that's kind of like everybody loves VNQ. So they're just saying that they can prove to you that their private REITs are better. REITs can grow, which will increase the dividend payout over time. I will show you on my next slides of a stock that I invested in. This is a successful REIT, the STAG Industrial Complex. STAG is a symbol. I am invested in STAG on E-Trade. Look how it has started since it's hit the public market. It is $29.96 a share right now. It is up 146% compared to the S&P since it started, to 123.74%. That is phenomenal. STAG it has also increased its monthly dividend over time. So look right here. Because STAG is growing as a stock and as a company, the price per share is slowly starting to go up. So it started off at like 0.1. It was way down there, and now it's just starting to grow and grow and grow and grow. So over time, if you reinvest your dividends and stuff, hopefully, nothing's set in stone, but the price per share is going to go up, and you're going to make more money in the long run. So if you have the patience and the discipline, and not be a gunslinger with buying and trading stocks like crazy, just the way people are with these marijuana stocks right now, or with Bitcoin or anything, you're going to grow over time. This is stable. This is something that you want. It's like a tree. People say money doesn't grow on trees, but it does. Look at this. It's going to go up eventually. It's going to go up. There are some really good real estate investment trust. One of them, there's two of them that I'm invested in on M1 Finance that I will go over on my M1 Finance dividend portfolio. So I really like the overall diversity of real estate investment trust. And I don't got time to, look, I have an active job. I'm a registered nurse. I don't got time to actively manage a building or something, or if people are paying rent and stuff. I don't have time if a pipe breaks and stuff. I'm at work. I work 3/12s. I'm going to have these guys actively. I'm giving them my money, okay, and they're actively managing this company, and they're rewarding me with dividends. They're rewarding all of us. So this is the thing I really like about real estate investment trust. These people do the work for you. You give them the money. Your money is going to make the money. They're going to reward you back because of the rules that I spoke about earlier with the 90% taxing that they have to do, or they have to give out the taxable income, or else they're going to start paying some penalties. So that's something that I really like about investing in REITs. Some people like investing in real estate. Actually, my neighbor right here, she has done a phenomenal job with real estate. I cannot wait to celebrate with her. She's in the top 40 on Cleveland's Crane's business right now, and she is a real estate owner. Her company has done very well. I think she has a network of like 70 people under her, and she's just making a killing with her real estate. I'm going to have to ask her for advice because I've never actively invested in real estate. This is more passive, like the real estate investment trust. This is why I'm doing this right now, because one, I'm looking at graduate school next year, and my money's making money right now, so I'm pretty happy with where I'm at. So I'd like to thank you guys for watching this video. Make sure you subscribe, like, and comment to my channel so that you can watch future videos on stocks and investing. I also offer real-life advice on how you can help grow as a person. I don't believe charging it to anyone. I love sharing my wisdom to you guys, things that I learned from people. This is why social media can be a powerful weapon. Some people have the greed. Some people have, I'm going to charge you $200 to watch my video or learn about my dividend stocks. I really don't believe in that. I think that's crazy. I think you guys should all learn. I think everybody should learn. I think the millennial generation should learn how to invest in dividend stocks so that they can have an extra source of income. Okay? I like the philosophy of having multiple sources of income. In my future videos, I will discuss some of my multiple sources of income. I have an active job. I don't plan on leaving my active job. I want my money to make money, and I want to grow as an individual. I want my net worth to grow. So I will teach you guys how to grow your net worth as well. Knowledge is power. Like I just said, I'm giving you my wisdom. I'm giving you my knowledge that I learned from people, how to read graphs, how to understand, be a smarter investor. I've heard horror stories of people just blowing their money, in marijuana stocks, and it's not giving off dividends. Some of these stocks are unstable. I hear about stories about people selling their house for Bitcoin. I mean, it's just insane, okay? You got to have the discipline, and I'm teaching you the discipline how to invest. I want you guys to make passive income and have an extra source of income, okay? We all need to have extra sources of income. I really appreciate you guys' energy and enthusiasm and support on my channel. It's really starting to grow right now. I really love the positive comments, the likes, the appreciation for this channel, because I'm doing this for you guys. This is a choice I made. I was inspired by an individual last year at Myrtle Beach who showed me how to make extra sources of income. He just sat down, he lit up a cigar on the beach, he just showed me. And I really appreciate the knowledge and wisdom I learned from this guy in a matter of 2 hours, how to invest. It was crazy. Do you guys invest in REITs? Tell me about your REITs. Which ones you like, which ones you think are crazy, which ones you think will not do well. If you guys are invested in real estate, tell me about some of your successful real estate campaigns. I would like to know. A lot of us on this channel would like to know as well. And one more thing, do you like REITs to give off monthly or quarterly dividends? Do you like them in your mutual funds? Do you like ones that give annual dividends? So again, I appreciate you guys for watching this video. And again, make sure that you like, comment, and subscribe to my channel so that you can watch future videos on stocks and learn how to be a smarter investor, and to make sure that you don't blow your money away and be a disciplined investor. So one of the keys about being dividend investors is having discipline, having patience, have your money make money, and not be a gunslinger, buying and selling stocks like crazy. Now, don't get me wrong. I will show you some future videos of some things I fell into a trap with, and luckily I only lost about $60 or so. But some people can lose a lot of money if they are not smart with understanding and reading stocks. So again, you guys have a great Sunday, and keep on watching this channel. And really, again, I love the enthusiasm on my channel. Thank you again, and have a good one.